This wonderful morning, our group is presenting on the article entitled Defer Compounding Interest During 6 Months Moratorium, reported by News Straits Times on 27 March 2020. This is the article.
Hi everyone, I'm Laura.
Let's start with the abstract. On March 27, 2020 at 9:21 p.m., the News Straits Times has issued an article entitled Deferment Compounding Interest During 6-Month Moratorium, stating that FOMCA fully supports the deferment of loan or financing repayments for the next 6 months. During the next 6 months, SME and households do not need to make their monthly fixed payments to the banks. However, the interest will continue to accrue on the loans repayments that are deferred, and consumers will need to honor the deferment repayments in the future. Loan repayments will resume after the deferment period. As for conventional loans, interest would continue to be charged on the outstanding balance, comprising of both principal and the interest portions that is compounded during the moratorium. That is, the loan repayment is just deferred by 6 months, while the interest continue to be accrued. With the article that was published by the News Straits Times on Friday, March 27, 2020, asserting the statement made by the President of Federations of Malaysians Consumer Associations (FOMCA), Datuk Dr. Marimutu Nadasan, has wholly supported the deferment of loan or financing repayments for the next 6 months that was originally suggested by our current Prime Minister Yang Amat Berhormat Tan Sri Muhyiddin Yassin, that has been implemented since April 1, 2020. As claimed in the article, SME and households are not required to make their monthly fixed payment to the banks throughout the next 6 months period of time. This act is performed to give a great benefits to the users because many people undergo a job loss, lack of income, and a poor economic future, and thus the regular repayments to banks for several loans can be a huge burden for their families. Hence, by reducing monthly obligations can also help the people, especially those with a lower income who work on a daily basis, which also with those who came from a middle class income is facing the deadly health disease and economic slump. However, the interest will continuously to be charged on the deferred loan for conventional banks and will be mount out. After the completions of moratorium period, all loan repayments will go on as usual. While the nation is going through a great disaster, FOMCA demands on the financial sector to give due concern and help buyers in these trying times to make the best of the current and uncertain situation rather than miserable future. To this extent, the FOMCA organization summons all banks in Malaysia to halt the charge of interest from compounding within this 6 months moratorium. By not compounding interest, the bank would be aiding households and families to recover from the economic and health disaster. What is it mean by deferred compounding interest during 6-month moratorium according to the article that has been issued by the News Straits Times? Defer means to postpone or to put off to a later time. Meanwhile, compounding interest refers to an interest that is calculated on its principal, which also consists of all the accumulated interest from earlier period on a deposit or loan. To make it simple, compounding interest considered as interest on interest. Next, moratorium refers to a legal authorized period of postponement in the performance of a legal obligation or the payment of a debt which may be enforced by government or by a businesses. These moratoriums are usually legislated by a country encountered an emergencies like a natural disasters or other uncommon situations in order to offer relief to their people who have lost their normal salary basis. For example, in this year of 2020, the world in war against the coronavirus pandemic has caused people to be temporarily out of work or even lost their source of income, especially those who work on a daily basis salary. As a result, several government organizations have issued a moratorium for the meantime in order to stop property owners from strike out renter out of their home for not paying a rent, which particularly doing so would create hazard or spreading the virus to the community by displacing people who might have carrying the virus. Moratorium is a short-term relief for people. It is a temporary relief for people on such as rent, mortgage, loan, or utility expenses. Creating degrees, some insurance company at times placing a moratoriums on obtaining new policies when a disaster is on the verge of striking a region. It can be arranged for a terminations after a certain period of time, or they can even be unspecific by means the government can announce the end date later on. In general, it is presented in result of brief financial crisis. A moratorium cannot be equated with a grace period, which is generally a period of time after an outstanding payment, such as on a loan, before the late charges are being charged, or before an official cancellation of a loan. Yet the precise classifications of the word can be slightly different, depends on the circumstances or an agreement involved. Next, I'll be pass it to Patricia.
Hi, I'm Patricia Sima, and I will explain on the issues and discussion on this article. Okay, the first issues that has been found in this article is the implementation of the compounding interest. According to the article, FOMCA applauds some bank for making a policy not to compound the interest during the moratorium 6-month period. FOMCA is actually urging the bank for not compounding it because by doing so, it is already creating a financial burden for people as soon as the moratorium of 6 months ended. This is because some people has already losing their job, lack of income, and poor economic future, especially for those who come in the lower and middle income level. The second point of the implementation of compounding interest is hence, not compounding interest will bring much beneficials for them, at least they have money for the essential needs. For example, according to the Borneo Post Online reported by Sarawak People Aspiration Party on the 14 May 2020, there were a long line outside the pawn shop that show many Sarawakians have not received aid during the moratorium. If during this moratorium period, people are still facing a financial problem, it cannot be imagined on what will happen after repayment loan resume later, and what make it worse is if the interests are being compounded. The third point of the implementation of compounding interest is the problem arise by not implementing compounding interest. Bank will badly affected. This is because under the normal circumstances, interest is the way of bank making a profit, and this profit is further derived from interest gained from the multiple credit creation. With moratorium in place, bank is unable to receive loan monthly payment, which usually used for multiple credit creation. Due to this, compounding interest rate would be reasonable to be put in place to make up for the disadvantage. Not implementing compounding interest rate would put pressure towards commercial bank financial management, as they cannot make profit while have to finance its operation costs. Okay, The second issues that has been found in this article is default in interest rate. It happened due to the deferments of compounding the interest regarding to the higher of the unemployment rate during this outbreak of this pandemic of coronavirus. The unemployment rate in March 2020 has increased to 3.9%. The chief statistician Muhammad Uzair Mahidin said that this unemployment rate was mainly attributed to the adverse impact of the movement control, by which this unemployment rate bring the default of the interest rate because people who has been laid off from their job are unable to pay the loan, in which that the consumer will need to honor the deferred repayment in the future because the loan repayment will resume after the deferment period. This default in the interest rate will not discount the possibility of further policy rate action to support the economy, which would the detrimental to bank margin given the flagging credit demand, and this could lead to the higher credit losses after the moratorium is lifted. It is because the bank impaired loan and this regulatory relaxation could increase the risk for the bank creditors after the moratorium ends. So, by having this default in interest rate, the central bank will persuade the commercial bank to increase the interest rate on loan by lead a decrease in demand for loan, so that the interest rate of borrowing become more expensive.
Hi, Assalamualaikum and good morning to everyone. I am Fadila binti Sani. Today I would like to explain about the solution for each issue that can be found in the implementation of compounding interest. The solution for each issue is by using monetary policy's quantitative instrument. The first one is the legal reserve requirement. The legal cash reserve requirement is where central bank requires all commercial banks to keep in the central bank. It will for sure affect the total amount of commercial banks' reserve. At the same time, it affects the amount of excess cash reserve in commercial bank, which reflect on the ability for lending loans to public. The central bank has the right to defer the cash and liquid requirements ratio of commercial banks depending on the situation, like currently the COVID-19. So in this case, bank may reducing the legal reserve requirement by enacting certain percentage of the reserve in commercial banks. This is because during the moratorium period, banks are having issue on receiving no money payment. Hence, with the reduced reserve, banks still have the cash to loan out to the public, which they do generate income. Then, it allows bank to offer loan to the public again, especially for people who want to pursue the economic activities, as they can issue loan with the banks and at the same time banks still have fund. The solution for a second issue is the Bank Negara Malaysia need to increase in legal reserve requirement, because an increase the legal reserve requirement ratio will reduce the ability of bank to provide the loan to the public, and it can raise the cost of credit so that the goods and services are limited to how much can be produced, and when there is too much money chasing relatively limited supplies of goods and services, the purchasing power of that money will diminish, which means that it takes more money to purchase the same amount of goods and services. As we know, that is the interest rate that the bank charge on loans of reserve to banks. Changes in the discount rate affect the cost at which borrowing can be made available to banks from the central bank. If the central bank increases its bank rate, the interest rate on borrowing becomes more expensive, and this will lead to a decrease in demand for loan. With the current state of affairs, the people are in the financial depression as they do not work, nor do some of them lose their jobs, so it is impossible for them to request a bank loan as it will increase their own burden. To solve it, commercial banks should reduce the discount rate so that the bank can offer the loan to the public at a cheaper cost. It will ease the access of consumer with the fund. Thus, people will able to participate in economic activities through the business and purchasing activities. Second is open market operation. The central bank can influence the cash reserve of commercial bank through its OMO. OMO does not directly dealing with the public. It includes the buying and selling of government securities and treasury bills by the central bank to influence the cash reserve in commercial banks. The central bank can change the direction of its open market operation according to the situation like the pandemic, where the central bank need to increase the cash reserve of commercial banks so that the bank is still able to sustain its operation. When the central bank wants to increase the money supply in the economy, it purchases the government securities from the market, therefore increasing the liquidity conditions through the year.
Hello and good morning to Dr. Norhani and my fellow classmates. My name is Christabella Lia Anak Gregory. This part is the monetary policy solutions under qualitative instrument. First, selective credit control. It enables the central bank to restrict unhealthy expansions of credit for specific purposes. The banking system can control credit through higher purchase restrictions by imposing regulations. The central bank will persuade commercial banks to grant loans for productive purposes only and reduce non-performing loans. Selective credit control can be implemented to focus on funding the evolutions of productive activities. Thus, the banks can avoid losses from the loans they offer without any financial shortfall, as it is given that the delay in repayment of the loan for 6 months has shown that banks are slowly taking advantage. Besides that, specific directive. The government through the central bank will inform the steps taken by them to reduce the volume of loans given to the public. The central bank will also influence commercial banks to restrict their lending policy, such as the need for collateral security, guarantor, and other measures which will discourage borrowings. In the perspective of banks' point of view, loans volume should be increasing as to incline the money supply in the economy. As a conclusion, the major purpose of the launch of this moratorium was to help the people of Malaysia to tide over liquidity issues brought about by the nationwide lockdown. During the Movement Control Order (MCO) period, debtors are more likely at the risk of walking into a debt trap unless the moratorium is extended or other aid measures are announced. Many are bound to find it difficult to pay for their loans at this date due to job losses, pay cuts, or suspension of business activities. With the implementations of this moratorium, many households are able to make a saving and lessen the burden of individuals in dealing with current issues, especially in terms of financial problems, as well as in purchasing of goods and other essentials. In the meantime, if we are able to service the loan as usual and are finally secure in this economic climate, we can consider opting out of this deferment program because Bank Negara Deferment Program is a beneficial step for all Malaysians currently servicing any form of loans and an important one during this challenging period. As a conclusion, government should study various other methods to ease the burdens faced by the people with another economic stimulus package. Also, Finance Ministry and Bank Negara Malaysia should provide more comprehensive economic stimulus package so the people could benefit from it. And government should include medium-term efforts to strengthen the nation's financial positions as well as necessary ways to provide assistance to all Malaysians. That is all from our group. Thank you very much for lending your ears.